Welcome back. We are counting down to the pre-opening rates. The SGX Nifty is indicating that after hitting a one-month high, the market may continue to inch forward, up almost about 30-odd points. We have with us Manoj Muralidharan, the Vice President Derivatives at Religare Broking, joining us now. Manoj, hi, good morning, and thanks for being with us on the show. Do you expect this market to inch up higher? If yes, what are the targets and what are the individual stocks that you're looking at today?
Good morning, Sonia. Sonia, yes, the answer would be yes to that question. The thing here is the Nifty has an open interest of close to 1.28 crores, and that is more or less the upper side of the range. So what we saw in the last trading session on Friday was there was some profit booking, though the quantum was less, hardly 1.5%. But we have seen good activity which has happened into the index option side rather than the future. So generally, when you get an option trade more than a future, the trade is that the dip becomes a buy. So we believe at least 17,750. That's a good level to go positional long for a target of 18,000. Stop loss should be 100 points on the downside. So you can use a 15th September call option of 17,800 when the Nifty corrects closer to 17,750. For the bank Nifty, we believe that these levels of support will be somewhere close to 40,200 to 280. That becomes a good support to go long, and it has a potential to touch almost 41,000 in the short term.
Any particular trades, picks, Manoj?
Yes, I guess IT, there is good index management, if I might say, that is going on. And IT as a sector, we have seen short covering majorly. But then a couple of stocks like HCL Tech has a good potential of a good 3 to 4% more on the downside. So use an option trade for that. Select a 960 strike and try to buy it between a 16 to 18 as a premium. Stop loss should be, let's say, 10 on that and a target of 30 on that.
All right. Thanks very much, Manoj. Appreciate you joining in and good speaking with you for that perspective at this point in time. Prakash is, of course, still with us. Market opening rates are coming up on your screens. So it's just the start and it's slightly lower. So subdued. I mean, 14, 15 points lower on the Nifty. The Sensex is down about, 65 points. At this point. I mean, largely the markets moved on and done very well, irrespective of what global markets have done. I mean, US markets were down for 3 weeks before last week, but the market here had no problem. It continued to inch higher, even run higher. And last week, US turned up about 4% week on week in the US markets, S&P and NASDAQ, and we were up about 1.5%. But the scale of the outperformance on any time period, year to date or anything else, has been just absolutely staggering. The rupee market's also opening. The dollar rupee is coming up at about 79.63. So first rates for this week, 79.58 was last Friday's close. Prakash, any thoughts on names like CDSL? I mean, actually, in terms of a depository, we only have one. My colleague Yash had sort of done that story last week on dematerialization of insurance policies. I mean, that's going to be a very large number, but in terms of exact revenue implications, etc., we'll have to see. But any thoughts here?
So, Prashant, let's for a moment keep that potential upside from the insurance policies getting dematerialized aside. Even on an organic basis, if you see today CDSL has crossed 7 crore accounts, which is significant in terms of not just a market share out of those 10 crore plus demat accounts that you have, but this is in spite of the fact that you really not had an IPO-led frenzy in the last 12 months or such. I mean, post the LIC IPO, I don't think there's been anything very significant which could have built into accretion of new accounts. But the way financializations of savings and the last mile connectivity is kind of improving with fintech playing such a critical role. I wouldn't be surprised if CDSL continues to grow at very, very decent ROCs. I mean, 48% plus ROCs. They really don't need to spend too much money. So it's a great business that keeps on throwing up so much of cash. And what one of the recent reports on CAMS tells you that even the penetration ratios in India on the mutual fund side, in spite of us being at the highest SIPs and highest AUMs or whatever, you still have enough headroom for growth out there. So this is a stock that you continuously add on lower levels, irrespective of all these triggers that you see. If that happens, of course, it's just a bonus. But even otherwise, I think organically it offers great potential to leverage on the Indian savings and investment story going ahead, Prashant.
Since we are discussing insurance, Prakash, I wanted your thoughts on ICICI Lombard. For a week now, the markets are waiting that block deal, right, where Bharti will sell stake. Your thoughts? The stocks underperform partly because of this overhang. But any views here?
So I think it's very clear that the way there's so much of regulatory change in mindset on insurance as a whole and ability to have newer businesses coming in, this sector will go through a little bit of a shakeout of sorts and consolidation there. And I think ICICI GI, ICICI Lombard is probably one of the most strongly placed bets across all verticals. So if this block deal were not to happen or were to happen, it really will not make a difference now because it's already been priced in, right? So I think it's kind of showing signs of bottoming out from a fundamental perspective. As I keep on saying, it's a basket that we've always recommended for clients to buy into rather than just one stock, whether it's life or non-life. And the same goes for this thing. But ICICI GI definitely seems to be showing that signs of bottoming out on it, and then there could be some sort of a outperformance from here on for the sector, for this company vis-a-vis the sector as a whole.
Okay, well, Prakash, thanks a lot for joining in and discussing all of these stocks, and have a great week. We'll come back to you yet again. Now, one space that has been in focus for a while now is defense. HAL is in focus on that note, so we'll go across to Vahishta to tell us about that. She's also tracking CAMS this morning, some interesting brokerage reports coming through for both. Vahishta, over to you.
Hi, thanks for that, Sonia. You're absolutely right in saying defense stocks have been in focus lately. Antique Broking has actually initiated a report on Hindustan Aeronautics. They say that the company is a strong play on India's defense aerospace capex. It has a robust revenue visibility for the future and has a strong order book of 848 billion rupees. It also has a strong pipeline to ensure the long-term growth visibility. The exports are a new growth driver for the company, which has grown at a CAGR of 31% from FY15 to FY22. And has reached today 130 billion rupees approximately. Now, given the multi-year double-digit earnings growth potential and the robust return ratio profile of approximately 20% for the company, Antique believes that the stock is at 19 times its FY24 EPS and is attractively valued. Also, moving on to the next stock, which is CAMS, Motilal has an initiating coverage on the report. They have a buy rating for the stock with a target price of 3,000 rupees, and they say that the company has 70% market share versus 64% earlier in FY15 and is the leader in the India's mutual fund registrar and transfer agent industry at present. Now, with the mutual fund penetration, which is low in India at just about 15-16%, as against the global average, which is much higher at approximately 63%, the company expects that there will be strong 15% CAGR in the assets under management for the industry in the coming decade. Also, the account aggregator business has the potential to revolutionize lending and the financial planning the way UPI had done for the payments. They expect the mutual fund business to register at FY22 to FY25 CAGR for revenue of 13% with 15% CAGR in the PAT, and operating margins is expected to probably remain flat in the near term. The ROE is expected to touch 45% in FY25. The dividend payments is also very healthy at approximately 60%.
Vahishta, thanks a lot for that update. The pre-opening rates are settling now and higher than the SGX Nifty. Like I said, SGX Nifty of late maybe hasn't mattered much as has been the case with most of the global cues. The Nifty is starting at 17,890 thereabout, and it's the IT stocks which are leading the charge. Infosys in particular, Tech Mahindra. Like I was making the point in the morning, a lot of factors. Nasdaq is strong. There's a bit of a mean reversion trade which might be playing out, and there's an expectation of Infosys buyback as well. It's settled now, 57 points higher on the Nifty. So Darshan, if we open here, do you trade the index, and what's your 9-10 call?
I would buy half of my position at the open after a few minutes and then look for a small dip to buy the rest. I would be long in the Nifty, and would like to be long in the Nifty and the Bank Nifty. Petronet is a buy with the stop under 213.
Okay, Petronet is a buy. By the way, the stock of the day today actually could well be PVR. Looking at the pre-open, it settled 4% higher in pre-open. Now, you remember the kind of selling that we saw on Friday in anticipation of perhaps Brahmastra also not doing well. And what's turned out is the tables turning on the head, and the movie turning out to be a big blockbuster over the weekend. So the amount of shorts that you have in PVR, this actually could be the stock of the day today. Mitesh, what's your 9-10 call?
Anuj, one, I had a sell on PVR, so I think that might not be operational because the stock will open gap up. Two, I think on the 19 call, Mindtree is my pick for the day. That's a buy with the stop below 3250 for targets of 3400.
Okay, Mindtree. Gentlemen, thank you very much. Good speaking with both of you, and talk to you again soon. Well, 9:10, which is about 5 minutes away from the market opening. Titagarh Wagons is another company we want to talk about. The company has divested part of its holdings in its Italian subsidiary, Titagarh Firema. The government of Italy has acquired 30% in the entity for 10 million euros. And UAE's PE firm Hawkeye has put in 4.5 million euros for another 14% stake. With this divestment, Titagarh now would be holding, its holding would be down to 49.7%. But why do this, and what's the rationale? Umesh Chaudhary is Managing Director and Chief Executive Officer at the company. He's joining us to take some questions. Titagarh, of course, has done phenomenally well. The stock price is up 60-70% this year so far. Umesh, great to have you on the program. Thank you very much. Could you tell us the reasons for this divestment of stake? Just some background. How much have you invested in this entity so far, and why do this now?
So good morning. So it's a very interesting development because it's a sovereign entering into a private sector foreign company. The Italian subsidiary is the company that we acquired in 2015, and we ran into some kind of headwinds because of the COVID and some legacy contracts. But the company is now turning around, and the very fact that the government of Italy has come in as an equity stakeholder would give us a lot of support, strategic support, because most of the client base of that company is the Italian government itself. So I'm told that we are a single-digit company in terms of number of companies that the Italian investment agency has invested into. So it's not a very regular kind of a feature. And obviously, they saw this company as strategic, and it's a kind of an endorsement on the venture as well. So from that perspective, it's a very interesting development.
No, we get that, Mr. Chaudhary, and it's good that the investment has come through. But why did you decide to divest stake so soon after you acquired it? Is it because the company is loss-making? And what was the contribution to your overall order book?
So if we look at the overall order book of India right now, we are at about 10,000 odd crores. We issued a press release last night. The order book in Italy is about 500 million euros. So that's about 3,000 crores, 4,000 crores, including framework contracts. So it's basically the investment that was done into Firema was a strategic investment to enable Titagarh Wagon also to enter into the coach market in India. We've been able to accomplish that. We've been able to get the technology transfer. We've been able to get the credentials. And today, Titagarh Wagon on a standalone basis is doing both freight wagons and coaches. So it made sense because the geographies are completely different. The ways of operations are different. The scales are different. So two companies have to work on an independent basis. In order to reach its potential, we believe that having the government on board as an equity partner would really enable us to reach the potential that Titagarh Firema has to offer. It's difficult for a foreign company to be owning a company in Europe, in Italy, 100%, and be able to reach that potential. So this was in sum and substance the rationale for.
Got it. Umesh, the Italian company basically is it makes rolling stock, but passenger coaches, right? That's
right.
And that's the technology you're using here in India as well now.
So we've already been able to complete the transfer of manufacturing with the Pune project. So in the Pune project, the first 3 trains came from there. 31 trains are being produced entirely in India, which have already started being supplied.
Okay, could you give us some sense now, overall, since we're running into market opening, on what the overall business is looking like? How robust is it in terms of existing unexecuted order book, new tenders, etc.? Just some overall idea.
Yeah, so the business is looking very robust. The whole Atmanirbhar Bharat Abhiyan and the Gati Shakti program of the Prime Minister has, propelled the business that we are in, both the freight side and the passenger side. We are on an order book of 10,000 odd crores in India with a last year's revenue of 1,500 crores. So if you look at the order book is quite high, but we have to execute this over the next 3 years. There are tenders worth thousands of crores in the pipeline. So there is a very strong order book pipeline that is existing today.
So this 15 million euros, what are you going to use it for?
It's going to be for stabilizing and growth of the company. So we are planning to increase the production in Italy to 20 coaches per month. Now that is at about 7 coaches a month. And this money will help us to get to about 20 coaches a month in the next 2 to 3 years.
All right, Umesh, we'll leave it there today. Thanks a lot for joining us. Let's now count down to the market opening because, we are in for a good start. IT stocks leading the way. As I said, PVR could really be the stock of the day in the first half. So these are a few names that you would keep on your radar. Adani Ports also did well in pre-open, so that's another stock that will be on your radar. So a lot of individual names. The Nifty opening very close to 17,900. The Bank Nifty opening above 40,500 in the pre-open. The first rates are in and the Nifty is looking quite good. 66 points higher now on the Nifty. Make it 68, 70 points on the Nifty now. Just relentless, this move. 75 higher on the Nifty. Just look at the move in Tech Mahindra, 2.5% higher. That really is your top Nifty gainer. The Nifty, by the way, is now up 79 points. And, it's IT stocks leading the charge once again. Infosys up about 1%. There's Tech Mahindra, as I said, up about 2%. Shree Cement, last few days in Nifty, of course, but it's making most of it, up 1% right now. Tata Consumer, Tata Steel, Eicher Motors, UPL, all doing well. ICICI Bank starting higher. The Nifty holding firm above 17,900 with good support from the likes of Infosys, Mahindra and Mahindra, Titan, Wipro, Tata Motors, a lot of individual names. Shree Cement and Tech Mahindra now fighting it out for top honors as far as the Nifty is concerned. On the losing side, not too many. Bajaj Auto is a bit soft. Apollo Hospitals, Kotak Mahindra Bank and HDFC a bit soft. But just look at that now. The Nifty is approaching a century now. 90 points higher on that. 175 points higher on the Bank Nifty. So things looking quite good over there. Just been a one-way market, of course, for some time. And that's sort of is continuing. Sonia, over to you for broader market.
Oh, it's a really good opening, Anuj. The mid-cap index is up 200 points straight off the back. The advance decline ratio is at 6:1 in favor of the advances. A lot of stocks picking up now. PVR is clearly your stock of the moment, 4% higher almost on the back of strong collections for Brahmastra. So that one's looking good. MedPlus is up 3%. Nomura initiated coverage on the stock. They have a target price of 925 on MedPlus. So MedPlus is just be up for you on your screen, up almost about 3%. You have KEC International that is up on the back of the order win. And a couple of these mid-cap IT names are doing quite well this morning, whether it's Cyient, Happiest Mind. Both these stocks are up anywhere between 2 to 3%. And some of the other names, CAMS is also in focus. Motilal Oswal has initiated coverage there. So CAMS is up in the green. Brigade Enterprise is up almost about 3%. Interesting to see what DB Realty is doing this morning, as there are talks that Adani Realty will be merging DB Realty into itself. So that stock comes up for you in a bit, 5% higher. What's on the losing end? Few and far between. Zomato a tad bit under pressure, BHEL as well. And Ambuja Cement too, just a tad bit under pressure. The market now is cooling off from the highs a little bit. It's about 77 points higher now on the Nifty. A lot of stocks hitting fresh 52-week highs though, so do keep an eye out on that. Indian Hotels at a fresh high. TVS Motor sitting at a fresh high this morning. KEI Industries. So the list is pretty endless, but overall, good opening.
Oh, great opening, Sonia. I mean, and it's easier to count losers as compared to gainers because, as you said, they are far and few in between. So just sort of marching on. We had the management of Nazara with us earlier, 40 minutes back. It's up 5%. It's coming up on very strong volumes as well. So about 773 on Nazara. PVR, of course, we already mentioned. Reliance Infrastructure is coming up with a 5% gain. On volume, so I'm just mentioning that. I mean, it's not just PVR, but Inox is up 4%. There is Serra Sanitary Ware, 4.5%, 5% on not huge volumes or anything. Brigade we mentioned, MedPlus we mentioned. TTK Prestige is another one which is coming up with about a 3% gain. But volumes are yet to pick up in any meaningful way. So that has to be said. Ambuja Cements is down about 1.25. There is Astral, which is down about 0.6. And KNR Construction is down 8%. I don't know if there's any news flow there. Volumes are decent for this time in the day. 235 on KNR at this point. Dream Folks, which is the recent listing, had a super debut, is down 1.25. So 424 on that one. And there is Anupam Rasayan, which is coming up with about a 4% cut. So just a bunch of names which are coming up on our screens at this point in time. All right, Gautam Shah is founder and chief strategist at Goldilocks Premium Research. He's joining us right now to tell us technically how our market's poised. I mean, any which way you look at this, Gautam, you got to say this is an extremely strong market. I mean, we're a couple of percentage points away from all-time highs. Are we getting there soon? What's your view overall, Gautam?
Good morning, Prashant. Well, the markets in the last 3 weeks has really behaved like that cricket player who's standing at 99 and is just having butterflies in his stomach, not able to take that run to get past 100. I think that's what Nifty has done, close to 18,000. There have been a few attempts to get past this number, but every time we get there, there is a bit of a pause and the market just does not have the strength. However, I think now with the global setup quite strong with the kind of rebound that we've seen late last week, it does seem that very, very soon we will get past that number of 18,000. And once that gets confirmed on a closing basis, we should see the market move towards a level of 18,600. But I think the key takeaway is the fact that even at these levels, there are no real overbought signs. There are no topping out signs. The market looks firm. There is phenomenal relative strength. Participation is great. Momentum on the good days is far better than the bad days. So just about everything suggests that this is a textbook style bull market that will continue. However, I think as I mentioned last time as well, the index is absolutely irrelevant because the kind of strength that you're seeing in the broader markets on a daily basis, while the Nifty went through this 3-week consolidation, just tells you that it is still a very bottom-up kind of a market. So the trend is solid. I think it's a matter of time before we get past 18,000 and then the index momentum shall pick up.
Okay. Gautam, hi, good morning. The index I want to talk to you about today is not the Bank Nifty, but the Nifty IT. Because, it's showing some signs of life, has tested its previous bottom and made a bit of a bounce back. Do you reckon it could come out of this bear market, or is this still a market in which rallies will be sold into?
Anuj, one thing is pretty clear that all the big winners of 2021 have taken a bit of a backseat. Banks did not really lead the market in second half of 2020 and 2021, and IT was that poster boy and just lost its sheen a little bit. But having said that, this last 2 sessions have been very good on the charts. I think this IT decline is a little overdone without any real materialistic change in fundamentals. We've almost seen a sort of a double bottom. I think this 28,500 area on the IT index was extremely critical, and I'm encouraged with the way the rebound has taken place in the last 2 days. So I think a reversal can happen. But if you have to play this story from a 6 to 12 month perspective, it makes sense to buy here because the downside is limited and the upside potential is about 15 to 20%. But if you're looking at outperformance, if you're looking at relative strength and momentum, I think some of the other sectors like capital goods, auto, real estate, public sector enterprise offer far greater value. So I think just need to be very picky there.
Gautam, hi, good morning. Just want to take that point forward. So you're saying autos offer real value, but don't you think one has perhaps missed the bus? I mean, look at the way the stocks have moved, right? M&M is up 60% this year. Eicher is up 35%. Maruti is up 20%. Do you see more upsides here?
I think so. I think don't look at stocks on a standalone basis with what they have done in the last 4 to 6 months. Look at what they have done in the last 3 or 4 years. I think the auto index was an underperformer. It found it very difficult to get past some serious resistance levels. A stock like M&M was in a range, for so many years. So once a breakout or a snap out happens, it usually, leads to a gear 5 kind of an activity. So I think there is a lot more upside for stocks like M&M and Maruti, which we continue to like. And even Tata Motors at some point of time should join the party. So yes, it continues to exhibit relative strength. We like it. And I think it's better to stay overweight in them.
Better to stay overweight. Now, which are looking the relative underperformers to your mind, Gautam? I mean, the stark underperformers.
There is just one, Prashant, and that's pharma. I think it's done absolutely nothing. It's been sideways all along. There have been attempts to rebound, failed every single time. Apart from a Sun Pharma or a Cipla or Loris, nothing has done well in pharma. And honestly, you don't fight it. This is the market where you buy strength. And if you do that, you'll do well. I mean, look at what real estate has done in the last 1.5 months. And I think there is 20% upside on the index, even from current levels. So I think I really want to stick to some of the top performers, even at these levels.
Stick to some of the top performers. Some stocks are bouncing back after going through the recent correction. Trent stands out in that. Trent is now at the high point of the morning. GNFC is the other one, which is making a bit of a move. And PI Industries, L&T, Infotex, a lot of these stocks moving up. Chemicals, Gautam, any names that stand out for you? Specialty chemicals that you want to back even at current levels?
See, specialty chemicals went through a very ugly kind of a correction for about 8 to 9 months. There were so many stocks that lost anywhere between 20 to 50%. And thereafter, this rebound in the last 1 month has made them once again quite healthy on the charts. I don't have any names immediately, but I think this theme is here to stay. However, I don't think this is such a structural theme anymore because they will keep finding supply at high levels. Obviously, people talk about valuations and the momentum is also not the best. So some of the names that you alluded to, and Alkali Amines, the PI Industries, Vinati Organics, I think they all have good setups. They'll do well. But once again, my focus is in some of the other names. In fact, I want to believe that what chemicals has done in the last 1.5 years, the PSU stocks can do. And I think stocks like Coal India and the likes, I see some very good charts there developing for the medium to long term.
Okay, what about financials? I mean, that's a space that has done its bit, right, in the last 6 to 8 months. ICICI Bank, for example, is at a fresh high repeatedly. Do you see financials lead the rally in the next leg?
Well, it's already leading the rally, Sonia. Had it not been for the financials, our market would not have outperformed the world and we would not have been at the doors of 18,000. I think that's pretty clear. Bank Nifty has witnessed a vertical move up. This is likely to continue. Even at these levels, there are no signs of topping out because while ICICI and SBI has already done well, there are some other stocks which are now joining the Bank Nifty party. And our working view is that the Bank Nifty moves all the way to 41,800, which was the lifetime high, before any meaningful correction is seen. So I think the loss of leadership from IT and Reliance, I think banks have pretty much made for it. And this is a great place to be in because in the last decade, whenever banks have done well, India has looked completely different.
Gautam, any names from the broader market which one can look at from a positional point of view, which are looking particularly strong, good for more?
No names as such, Prashant, but I think if you look at themes, I think auto ancillary has been on top of our list for a very long time. And off late, we've noticed in the last 10 days, a lot of cement stocks are doing well. This could be large cap cement and mid cap cement. I think this could be a bigger theme that could be in play in the next 6 months. And it's obviously an indirect proxy to real estate as well. So these are the two pockets where I'm very convinced about. And not to forget the unlock trade, which has been my favorite all along, the Indian hotels, of the world, Ease My Trips of the world, and the entire QSR space. So this entire basket and the three themes which I mentioned, I think should do very well over the medium term.
What about real estate? That's also part of some kind of that, anti-lockdown trade, and that's done well as well. But any names here that stand out, Gautam?
Sorry, I didn't get the sector, Anuj.
Real estate.
Oh, yes. I think, real estate witnessed a breakout from a 10-year range last year. I think a lot of technicians in India had highlighted that. Thereafter, we witnessed a fall and it's come back very well. Look at what DLF and Oberoi Realty have done in the recent past. And I think this is a trend which is here to stay because our working target for the NSE real estate index is about 530. So that's a good 20-25%. I think this is a very big theme and the stocks will eventually turn vertical, the kind of moves that they're going to see. So we have been recommending subscribers to just stay invested. Do not play for the short term because I think there is a bigger theme and use all dips to top up.
Okay, stay invested. For the market on the whole, Gautam, how do you feel about what part of the rally we are in right now? what would the texture of this market look like, say, over the next 6 to 12 months? Immediately, of course, we have a big event upon us. There's the global markets that are in a recession. But as all of that plays out, how do you see the Nifty move?
Well, it's a very unique spot that we are in. I think it's after many, many years that you have a scenario wherein global markets can correct 7-8% and India just stands there, just sideways. That's what has happened in the last 2 weeks. And I think if you look at the strength in mid caps and small caps, I think even the mid cap index is, 2% away from lifetime highs. Small cap, I think, is going to be the flavor of the next 6 months. I think I have some wonderful technical triggers on the charts. My working target of the small cap index is about 11,000. And if the Nifty actually just manages to stay in a range, I don't see any fireworks in the Nifty, because I think people will start saying whether valuations are justified. Can we actually sustain above 18,600? I think we will, but I think the bigger opportunity is the broader markets. So I think with global markets coming back, S&P 500 rebounding from the support of 3,900, NYMEX crude breaking 85, USD INR pretty much stabilizing around current levels. I think there are too many tailwinds for India, and therefore broader markets is the place to be in. So be stock specific. I think that's the key takeaway.
So smaller segments, which I don't know, you looked at hotels, for example, right? There are some 19-20 names in that space, huge relative outperformance from the time that the market topped out. There is paper and paper companies, paper products, etc. Again, lots of listed names. Now, these are smaller parts of the market, really, so not very large. There is sort of power generation, distribution companies. Again, defense, of course. I mean, huge outperformance in the 4 or 5 names there. Do you like anything here?
Everything, actually, Prashant. I think you just listed out all those names that we like. So paper, I think, has been a big story. Defense, BEL, HAL, and some of the other names, phenomenal moves there. And, many of these sectors were not the big winners of 2020, 2021. That's the key takeaway. There are new leaders emerging every single day, every single week. And therefore, please remove from your memories, the winners of 2020. And that's how you'll be able to play possibly the next bull trend over the next 1 year. And I think all those themes that you mentioned, we like, and I think they're likely to do very well.
Okay, by the way, I just want to point out the bank Nifty is almost in the red, and the Nifty is still holding almost at the high point of the morning. This really is the key highlight of the first half an hour of trade. This really is that sector rotation that I was talking about, where IT perhaps just in the near term will take over the baton from the bank Nifty purely as a tactical play. The IT index right now is up 2%. That's a massive move. Remember, this is on top of Friday's move. And the bank Nifty is actually, as I said, in the red, but compensating for that move. So the 200-day moving average on the Nifty IT comes in at around 31,000, 32,000. It sort of defended the 20 and 50-day moving average just as a mean reversion trade. Perhaps that's done, and that's what's indicated in individual names as well. Infosys, Tech Mahindra, HCL Tech, all doing well ahead of earnings season. In the broader market, Gautam. Mid-cap IT, I know we've discussed IT, but in the mid-cap IT space, is there any outlier that you may want to back?
There are actually many. In fact, if I have to pick IT, I would pick mid-cap IT at these levels, because many of these stocks, again, lost 40-50% in the last 9 months. And I think they're all coming back very well. Whether it's Happiest Minds or an LTI, LTTS, Capitec Tech, I think some very good setups developing there. The best part is at an 18,000 index, you don't have too many sectors or pockets with good risk reward. And I think IT presents there, and you've just spoken about it in detail. So yeah, I think the charts and with what you just mentioned on the fundamental and valuations perspective, it just falls in sync. So this might be a good time to stay overweight IT.
All right, Gautam, we'll leave it there today. Thanks a lot for joining us. So that's the word on the market, which is holding firm, by the way, though off the highs now because of the decline in the financial names. Kotak Mahindra Bank and a couple of HDFC group stocks, HDFC Bank actually in the red. So that's not helping right now, but still the market's doing quite okay. Now let's move on then and discuss one of the sectors we just recently discussed. A recent report by Motilal Oswal suggests that the Bengaluru property market will see very strong demand on the back of increased IT hiring. More global captive centers and best-in-class affordability are also among other key factors. We're now joined by Irfan Razak, who's, of course, the CMD at Prestige Group and one of the well-known faces from that market. Mr. Razak, good morning. Thanks a lot for joining us. Are you seeing on the ground this play out? Have rates started to move up?
Actually, it's been happening the last 3-4 quarters. The demand has actually, there's a big uptick in demand. People are committing themselves, people are buying homes. And of course, with the input cost increasing, with the cost of all commodities that go into construction going up, obviously the price also has to go up proportionately. At the same time, we are not very keen that the price goes up so high that it becomes unaffordable. What with interest rates also gone up some 1.4 basis points, we are trying to see that we keep the numbers as affordable as possible, and at the same time see that our bottom line doesn't get affected. So that's the balance that we keep working on, and I'm sure we've achieved that. But the good news is the demand is there, and the demand continues to be there.
Mr. Razak, good morning. So when you say demand is there, can you give us some numbers on what the collections could look like? On an average, you have been doing, collections of around 2,200 crores per quarter. Could it be outsized gains over the next few quarters because of this pickup that we're seeing in demand?
It's one is it's a function of sales, and then it's a concurrent to that is also the collections that go on. Both are good. See, last quarter, I think we did the highest sales in a quarter. That's 3,000 plus crores. And I'm sure we are just in the beginning of September. By the end of this month, we should reach the same target that we had done in the previous quarter, or maybe exceed that a bit. And obviously, the collections also will be proportionate to that. So the overall atmosphere and the mood is pretty positive. And I'm sure that the teams are working to see that we get in more inventory. Now, the biggest problem that we are facing is the shortage of inventory. Though we have land, we have projects, but then without approvals, without RERA, we can't launch them. So obviously, these products will come into the market as and when the approvals come in, as and when the RERA approvals come in. So this quarter we have managed without those, but then definitely for sure we'll have a lot more new products coming in the coming quarter.
Mr. Razak, hi, good morning. Prashant here. The national headlines over the last couple of weeks were with regards to the rains in Bangalore, right? And how sort of good weather by itself, and that's been such a large lure for a city like Bangalore, right? Would you, into your mind, I mean, do you see, and one of the refrains has been that there's been maybe too much unplanned construction which has happened, and no way for the water to go. And in many cities, it's like an annual event. I mean, there is a lot of hullabaloo for a couple of weeks, and then people forget all about it. But from a policy perspective, any changes which are expected? I mean, just your view on it, sir.
Yeah, I do believe that, it's flooding and heavy rains are a natural calamity. This year, we've had unprecedented rains in the month of August as well as beginning September. Fortunately, last few days, we are dry. And rightly said, whenever that happens, everybody wakes up and there's a lot of noise everywhere, including the social media everywhere. People start cribbing about it, and then suddenly it's forgotten. But that's not the solution. The solution is that we need to see where the problem lies. And, the first thing that happens is the developers or the builders are the ones who become the bad guys. But we are not the bad guys. We build as per law, as per rules, as per whatever the framework that is present. And nobody has the gumption to either approve, which is out of the law. And I don't think anybody will be stupid enough to build anything that is outside the framework of law. But then, having said that, I think we as responsible citizens, along with the bureaucracy as well as the local politicians, what we need to do is we need to sit together and see how solutions can be brought on a permanent basis, that even if there's very heavy rainfall, there's proper drain off, there's proper water flow into the lakes and all of that, and there's no blockage and other stuff. which is being talked of. I think if we really work on it it can't happen instantly, but if a thought process happens in the next 6 months and next 1 year, 2 year, we can definitely mitigate this risk. And there should be no flooding in the city. The city is good. People are responsive. People are responsible. And I'm sure that if we work together as a team, we can definitely achieve results.
Absolutely no doubt about that, Mr. Razak. I think perhaps the best metro city that we have in this country by a mile. Okay, now tell us, since you operate in so many segments, what's doing the best? Is it the pure, residential real estate, commercial real estate, lease rentals? What kind of markets doing best for you?
No, we are fortunate as a company to be operating in all asset classes and also all geographies. So the good news is, while residential has been doing extremely well in the last few quarters, the hospitality, retail, as well as office also, there's an uptick. Especially hospitality, last 2 quarters has done very well. And all the hotels that we are operating have given us great revenues. And of course, when it means great revenues, it also means better bottom lines. And so also office. There's a lot of stock that is getting also built, but there is an offtake, and the vacancy levels are single digit, maybe 3 to 4%. So that helps the cause, and good properties in good locations are getting leased out rapidly. And the rentals also are going northwards. It's not as though they're stagnant or there's a lot of bargain that goes on the rental part. And retail, yes, there is a lot of shopping that happens, a lot of trading is happening. Though most of our, one big chunk of our retail malls, as you know, we've already hived off to Blackstone. But we do operate a few which are left over, plus a lot of new ones are coming up. Like now the largest mall which we are in our portfolio is getting ready and should open its doors shortly. That's the Prestige Falcon City Mall. And then also a Kochi Mall, which is both are almost 1 million plus square feet. So that will help the cause. And there's a lot more coming up, but retail is done well. So if you take it, retail, hospitality, office have picked up. Residential was always doing well in the last few quarters. So all in all, it's a happy moment for us. We do hope that there's no new surprises. And as long as things are remain constant, I think we shall be actually doing better and better.
Sure. So can you give us one number? I mean, you launched about 17 million square feet in FY22. What is the target for FY23?
I think it will be about the same or a little more, because I think the next 2 quarters is all about launches. We are working hard to get the approvals and the RERA, and we've got across geographies, whether it's Bangalore, whether it's Chennai, whether it's Hyderabad, or even we've got a project now in Calicut. So all these put together, there will be several launches that will happen. And this will actually outstrip the numbers that we have done the previous year. I don't want to just give you a number because it's a function of when we get all these approvals in place. But I think the team is really working hard to see that it happens. And we are, most of them are mature, that reach almost the final stage, and we should see some good traction on that.
Right, Mr. Razak, thank you very much. Great speaking with you, sir. Appreciate you joining us on the program with that perspective. Thanks indeed. Well, the market's up 100 plus points. 17,938 is where we stand at. So, there was a bit of an intraday dip. The market gave up almost 30-40 points, but it's come right back, sprung right back actually. The IT index is still up the biggest amount, so about 1.75% gain on the Nifty IT index. The small cap space is firing. It's up 1%, the index that is, and the metal space is up about 1% as well. So those are the 3 areas seeing the maximum action: IT, small cap, and the metals indices. So 3 legs there. 17,939. We'll take a quick break here. We'll have Mr. Vivek Chand Sehgal of Samvardhana Motherson. The company's acquired assets in Daimler India commercial vehicles. We'll talk to him about that. Swaroop Mohanty of Mirai Asset Management and Manoj Nagpal of Outlook Asia Capital will join us a little later to discuss the mutual fund flow number for August. Stay tuned.